The hidden pattern behind cash flow stress in med spa. Many med spa owners believe their primary problem is low revenue, but the reality is often more complex. Financial stress in med spas frequently exists even in busy clinics with full schedules and supposedly a lot of clients. About 82% of small businesses fall due to cash flow mismanagement and management rather than things like marketing and or services they offer. This number is particularly relevant in service-based industry like aesthetic and med spa, where revenue can look good, but financial stability remain weak. A common pattern occurs when a med spa has high activity but unpredictable cash flow. 1 month revenue looks strong, treatments are fully booked, and the clinics feels successful. Then shortly after, there is a problem, even paying payroll on time. Equipment payments are due and operational expenses rises, and the owners must use personal saving to pay for bills. This cycle creates chronic financial anxiety and mental fatigue. Surveys shows that about 64% of business owners may develop sleep problems due to financial and operational stress, which directly impact their daily decision making. The typical reaction to cash flow instability is to increase revenue through more marketing or promotion and service expansion. Many owners invest thousands of dollars into advertising, new devices, or certifications and add more treatment to their menus. However, increasing revenue without paying attention to the other aspect of the business often increase more complexity and overhead costs and operational pressure to the whole business. The businesses offering too many unfocused services can experience up to 30% lower operational efficiency compared to specialized service models. A med spa is not just a revenue machine. It is a financial system that includes pricing strategies, service profitability, and staff productivity, things like expense allocation and decision pattern. If any of these elements are inefficient, financial instability will continue regardless of how much money you make in the business. For example, frequent discounting due to fear of losing clients can reduce profit margin up to 15 to 25% over time. Similarly, unused machines and excessive service expansion can significantly increase fixed costs without proportional return. Another critical but rarely discussed factor is mental load of the owner. Running a med spa involves managing clinical responsibility and also staff and clients or patient, compliance, marketing and finance, and many more things all at the same time. Under constant stress, decision making becomes reactive rather than strategic. Behavioral research indicates that high stress reduces long-term financial decision quality by over 30%, which means the quality of our decisions reduce if we have stress and anxiety. And we tend to make short-term decisions or work harder. And that eventually cannot fix the problem, but make us even more tired and exhausted. The surface and visible problem looks like revenue fluctuation, but the hidden cause is often inefficient allocation of resources and the lack of service focus and uncontrolled expenses and emotionally driven business decisions. In these cases, more marketing may bring in more clients, but without an internal financial structure, you may make more money but with more complexity and problem along the way that comes with all those new clients. A holistic diagnostic review often shows that the business does not necessarily need more revenue or more services or more machines or devices. Instead, it needs more money management and to look for where the money is leaking, how services are performing financially, and look for descriptive internal pattern and that are damaging your business. Studies shows that the businesses that implement a healthy financial and operational diagnostic improve stability by over 40% within the first year compared to those relying on technical things like marketing and just buying new machines. Sustainable financial stability in a med spa is not achieved by continuous chasing growth. It is achieved by finding the hidden pattern affecting pricing, expensive and services and structure, and the decision making of the business. Once those root causes are fixed, then cash flow becomes more predictable, operational stress decrease, and the business transition from reactive survival to controlled and sustainable growth.